We're live. This is Pitchdeckasia in the Singapore studio. My name's Graham Brown, joined by both representatives of Irbis Ventures, Tsengel and Zheng Wei. Welcome to the studio. Familiar faces as well. Great for you to be here. So thanks for joining us today.
Thanks so much for inviting us.
Yeah, so I think this is going to be an interesting conversation. We're not just talking about your startup. You are a startup helping startups, but also we're diving a little bit into Mongolia and a lot of emerging markets around Asia. So it's an exciting topic. We're really at the beginning of a new chapter in the startup ecosystems of Asia as well. Zheng Wei, you're from Singapore originally. You're from Mongolia.
Correct.
So just so we know you're legit from Mongolia, let's put a shout out to the listeners in Mongolian, your local language, or however you would want to address your fans out there. Just say hi and thanks to everybody, just so we know you're the real deal. All right, cool. I'll take that as it is. So you have people back home watching in Mongolia? Maybe there are people watching live. So
yeah, of course.
Yeah, we'll just say hi to everybody out there. Thanks for joining us in. If you're watching this podcast with these two chaps, please hit the like button. Help them boost this story out to the wider public on YouTube. Where do we start? Let's talk about Irbis Ventures, your gig, your startup itself. Maybe you can describe to us a little bit about what you are, put the product on the table, so to speak, and then we'll jump into the pitch deck and look at where you're coming from. So who wants to kick off with a definition of Irbis Ventures? Maybe Tsengel, you're first.
Of course. So in 3 words, it's actually startup support infrastructure. So basically, in every city, there are infrastructure, which basically helps all these stakeholders to reach certain, point 1 to point 2. So basically, we are that infrastructure for startups.
Yeah.
Basically, reaching certain point, either it's fixing the company legally or fixing the financials or even just fundraising. We just help them to reach that point.
Yeah, and particularly emerging market startups.
Emerging markets.
Correct. So we'll dive into this, that we'll have a look at what the problem is. I'm curious to know, before we get started, your backgrounds. How would you describe yourself? Are you finance people, startup people, engineers, government people, accelerators, VCs? Where do you come from? Same way, what about yourself? What's your background?
I started in the finance area. So myself is a chartered accountant. So I first started in investment banking at BNP Paribas. But then I got really bored. And then from there, just startup.
A startup as on the startup team or advising startups or fundraising?
First, I joined a startup. That's how I started. Then I joined a second startup. Then I started founding my own.
Right.
So that's where I am.
So you're legit. It's not like you're somebody advising startups who's never done it himself. You're an accountant who started a business and you've been successful in that. So you understand the pain of startup founders a little bit?
I think in the startup industry, right, you sort of split it into 0 to 1, 1 to 10, and 10 to 100.
Yeah.
So I was quite fortunate to be in all 3 of them before. So 0 to 1, I kind of understand the pain, how you get started from scratch. And then 1 to 10, your first growth, that's what I have before as well. And then 10 to 100, all the way to the exit. So
excellent. That's the kind of person you want on your team. How about yourself, Tsengel? What background do you come from?
So I'm a lawyer. Basically, before this venture, last 9 years, I've been working in Singapore as a finance lawyer.
Yeah.
So name Hogan Lovells and Jones Day. And then I actually new to the startup world. I'm just getting learning the ropes now.
Great.
Talking with startups, understanding their pain, what's happening. During my lawyer years, I helped a couple of startups, more of a pro bono basis, because big law firms, they basically don't accept startups because they are contingent client. They basically they afraid they don't pay, just go away, right? So that's the reason, unfortunately, during my 9 years in law firm, I couldn't really help startups, but I did it pro bono basis, and that is the actual reason I moved to the startup world.
Yeah, you got infected.
You can say that.
It's good though. I mean, in terms of this conversation, how you came together as a team as well. How did that start? Where did you meet, and who pitched you, who the idea?
So actually, that would be me. Zheng Wei and I met 9 months ago.
Right.
And then where I actually was representing, that time we were called Gravity Lab. And then we started as a blockchain project. And then Zheng Wei at a company called Sato, they do blockchain related work. And then we actually met at PwC office. And then we had a good chat. And then after like that meeting, we worked together about 3 months. And then we liked like Zheng Wei's team, and like, you know, hopefully they did. And then maybe that's the reason he's here. And then we actually built the team about 6 months ago. And then we're doing this now.
Great. So are you the two co-founders of Irbis? How does that work?
No, actually, the main 3 founders are Mongolian.
Okay.
They're based in Mongolia. Probably they're seeing us now.
Oh, fantastic. Yeah. Shout out to them. Thank you, everybody, for making this happen. So you're representing Irbis here. So let's talk about what you do. So we've sort of started talking about the subject and what the problem is. So if I can jump into the pitch deck as well, maybe we can have a look at that first. You've got it here. I won't talk about all the slides on the pitch deck, but if we can, you've got the problem on slide 3, and this is really an emerging market problem, right? There are networks, infrastructures, ecosystems out there supporting startups all over the world, yet they kind of make sense when you have the density of startups, when you have, like here in Singapore, a lot of startups in a very small space. You know, it's 20 minutes one side of the island to the other, right? You've got 6 million people, 6,000 startups maybe. So you can easily service that with some kind of infrastructure or an accelerator. Yet when we go into emerging markets, it's a different story altogether. So maybe you can start by telling us what's on this slide. And bear in mind, some people aren't watching this, they're listening to this as well on the podcast. So tell us what the problem is with startups in emerging markets.
Do you want to go?
Sure. I think this is a two-sided problem. So on the first side is the investment side. So as an investor, basically, if you want to invest in the emerging markets, today there's so much friction. Firstly, a lack of knowledge. I mean, come on, who can invest in a Mongolia startup today?
Yeah.
Right? You don't know their language, you don't know the culture, you don't know their demographics, you basically don't know what's happening, correct? And then it's really difficult for you as an investor to build that kind of rapport with the founders as well, right? You don't speak their language, you don't kind of understand their growth, the history of the country, what brought them to this stage is very difficult. So that's one side. On the other side, which is the ones that we are more interested to help, is actually the startups. Like you said, right, Graham? In Singapore, there's so many startups. It made so much sense for so many people to come and help them. There's so many service providers today helping the Singaporean startups. But for example, in Mongolia, there are 400 over startups. And as of today, and before we existed, there are no accelerator, no incubator, no VCs that specialize in helping them. So these guys are out there grinding day and night. They're really smart people, very, very talented, but they don't have the support.
Yeah.
So that's where we come from.
So it's really both sides, isn't it? You have startups who don't have the support, and you have investors who don't know how to find quality deal flow,
right,
and don't have access to those startups as well.
That's right.
Traditionally, this would be where an accelerator, maybe even a fund, comes in and puts that together. Why can't we do that in an emerging market? Why can't we go in, build an accelerator or build a fund and solve that problem?
So on that, right, actually, maybe I'll tell you a story. Last week, 2 weeks ago, we were in Hong Kong. We met one of these biggest accelerators rep. And then he was saying he did an investment in Pakistan, where actually Osama bin Laden was found. And then he didn't know. Actually, he thought it's Pakistani startup. And then he thought it's based in Hong Kong or Singapore, right? And then he actually, wanted to talk with them. And then apparently they're based in that city. And then he was too afraid to fly to that city because It is just like, security risk, right? And then he sent his associate there with so much cost. So basically hotel and then car and then bodyguard. Basically, like, just to find one startup, spending that much money is a bit difficult for big accelerators and big VCs. Because non-investment activities is like, for VCs is cross. Unless like, they find like, golden opportunity there, right? And then for these big VCs, because they have very good deal flow, they don't really see these emerging markets at the moment until like, someone comes out of those countries and then they are like, strong enough to just go into their portfolio. It's okay. So we have a case, Unglue, which is one of the first like success story from Mongolia. They were part of Techstars program last year. So this is the case where they come out of Mongolia and then they actually part of the big accelerator program and then big VC investment, right? And then for those people just to go into those countries is almost impossible at the moment, for the reason that they have also reputational risk to think about. They go there and then if it fails, it's a bit like, big hit for their portfolio and everything, right? So that's where we come in. We actually go to a country emerging market, and then we actually source deals. We make due diligence, and then we actually find those like good startups, because like they're like quite rough, right? We help them like shape them and then like polish them, and then to be ready for those institutional investor next round. So it's just like helping that startup to be ready for more institutional investor ready.
Yeah. So you're sourcing talent in these markets and also refining them as well to help them get to the stage that makes sense for an investor.
Exactly.
So you're going into these markets. We'll have a look at the solution in a minute. What markets are you looking at the moment, just to give people a flavor? Obviously, you mentioned Mongolia as one.
Bangladesh, Cambodia, Myanmar, Laos, Vietnam.
What's the sort of the mandate with all those markets? Why those markets? Is it just geographical focus, or is it something about these markets that connects them all together?
All these countries, like one common thing is high risk, because at this stage they're not success story from these countries yet. There's no unicorn. So like success, the word itself at this stage, venture capital market, everyone thinks about exit, right? How many exits were there? Were there like hundreds of $1 million worth company, or were there any unicorns? At this stage, from these countries, except for Vietnam, I think there weren't any that success story. A lot of companies with hundreds of millions of dollar worth, like value, but value without liquidity and exit, it actually does not mean anything.
Yeah.
So that one actually is like the definition of those emerging markets at this stage for us.
So you're going to those markets rather than, let's say, for example, Thailand, because your value ad's probably less realized there because it's a much more developed, less risk. There's more, track record of unicorns and so on. You're going in at a very sort of early stage of the market where it doesn't have all that.
Yeah, exactly that. So basically, ecosystem. If we see ecosystem, we can see like different things. There are stakeholders, mentors, professional consultants, and then startup founders, and then also the actual investors, the most important part. And in all these countries, one thing that is lacking is the culture. What I mean by culture is investors understanding what type of investment this is. You invest $100,000 and then you don't expect within 3 years it would become $600,000. So that is not how it works. But we can see easily that there are angel investors who's actually trying to help these startups, sitting there around, but not really helping them.
Yeah.
Give the money and then just expect the result. So it's a bit difficult for startups, to go to region and then find those mentors, build a network without that help. So ecosystem itself is not well functioning, right? So we actually building ecosystem which is online, and then you can say virtual ecosystem, where startup can get access to those opportunities or privileges that only startups from more mature ecosystem actually has access to. Singapore, Thailand, Indonesia, Japan, Korea. Those are the ecosystems at this stage functioning properly. And then the reason is basically there are a lot of new startups coming. And then VCs are targeting those markets at the moment. Just like going there and then going full on.
So is it reasonable to assume, for example, you have a Singapore angel investor who maybe has some exit experience who would go virtually maybe to Mongolia through your ecosystem and invest in a Mongolian startup and mentor them? Or is it very much local to local market, like Mongolian investors investing in Mongolian startups, as an example?
It would be the first. Basically, this would be like, one of the reasons this is online is we want to eradicate the geographical limitations.
Yeah.
So everyone in the startup world, including investors, they're looking for good startups. They're like hungry for it. There's money, there's talent waiting, and then everything's there. But it's just finding those startups is a bit difficult. Because all startups, they believe they are that good startup, right? But the issue is how you show to these people that you are a good startup, you're serious, you're not making any bad things. Because startup also need to see from investors' perspective, where they have financial risk, at the same time they have reputational risk. If an investor invests in a startup they don't know about, and then that startup does something like, let's say, because I'm a lawyer, illegal. Imagine that reputational risk for that investor.
Yeah, and it's just the time, isn't it, that will take.
Exactly.
Especially if it's over there. You'll get sucked into a situation you don't want to be in and take a long time to get out of it. Okay, let's have a look at the solution itself, and we'll dive in to how this actually works. And you've got a few case studies as well in this. So we jump back into the pitch deck, and the solution sort of split over a couple of slides. You've got the pilot market Mongolia, and then also later on you've got your platform Explorer and Oasis. Can you start by sharing some of the numbers on Mongolia, the market opportunities here, so we know what market we're dealing with as well? So maybe you can talk through some of the numbers here, because if I'm not watching it, I might have to hear this. So what have you got on here, the size of the Mongolian market and what's going on?
So maybe I can start, and Tsengel has some more numbers that he can add, right? So one of the most interesting thing I found in Mongolia is the efficiency in capital deployment. I mean, I have ran startups in Singapore, right? So I know how expensive it can get in Singapore. So compared to Mongolia, right, Singapore is 8 times more expensive
To deploy capital.
Right.
Right.
So for example, hiring an engineer, hiring a marketing manager, etc., etc. But to me, technology is kind of cross-border, right? If you build an application in Mongolia and you build an application in Singapore, they actually have not much of a difference, right? So from there, it just shows how we can kind of arbitrage the kind of cheap capital in Mongolia to help get the startup started.
Yeah.
So that's one. So if we invest in Mongolia, you kind of have 8 times the runway, so to say. And then the other one that I'm interested is that in a small population of 3 million people, and about half of them in the capital, there are actually 400 over startups there. And then these 400 over startups, they only started about 2 to 3 years back. So if you do the trajectory, and then you look at the number of talents that are coming out from, in the past they used to do outsourcing for foreign companies in the West or other parts of Asia, right? They are now saying, hey, I'm not going to help someone build their dream. I'm going to build my own dream. So 400 over startups, maybe next year 500, no, the next year 1,000, I don't know. But this is something really interesting. And I think there's some demographics, demographic numbers that Tsengel can share.
So as Zheng Wei mentioned, in Mongolia, we have about 3 million people as a total population. And then if you see mobile subscription, it's about 4 million. And then if you see people with actually account in financial institutions, it's about 93% of the population. And then if you see credit card holders, is 3%. So you can see there's a lot of opportunity there for fintech companies and then for also e-commerce companies. And then it is just very excellent test market. So the reason is also regulation-wise. The Mongolia is developing country. The government is quite liberal on making regulation easy on startups. And then fintech, like Unglue story, when they started 2016, there was no fintech regulation. And then even now, there's no sandbox regulation at the moment. But that is under preparation. That is what I heard. And then it is just for startups to start there. It's just amazing. The consumer readiness is about 84%. So the people are very adaptive to new technology. So there's a lot of opportunity there. And then for startups just to go there and then do the business, even they're just piloting their project, it's something to go there.
Okay. You actually have a case study in here, so maybe we can have a look at that. We jump back into the pitch deck. So this is you mentioned some of this already, so tell us a little bit about what is on this slide here, a Mongolian success story, a self-polished diamond. You've brought up Ant Global already, so what is this about? Tell us what we need to know, because not many people know a lot about Mongolia, especially in the startup scene, and you're sort of bringing it to people's consciousness now, which is great. We're not familiar with the company names either. Maybe if somebody's in fintech, they might know. So tell us what is on this slide and what we need to know.
So Unglue is the first fintech company come out of Mongolia. They were actually part of Techstars program last year.
Yeah.
And then they have investment from Rakuten as well as Techstars. And then this company is truly amazing company. So the founders are Bolbata and then Anar, who are actually our founders, the Irbis Ventures. And then these guys in 2016, Bolbata was accountant at PwC, and Anar was just finished Dakar Rally with motorcycle. He's amazing guy. And then they actually decided to start this company in 2016. And then within a year, they deployed hundreds of thousands loan. And then in addition, 2017, they raised from Mongolia the first, the foreign investment, the equity investment. And then basically that gave a lot of startups hope that the Mongolian startup can go regional. And then now this company, the valuation is about $65 million. And then they started in 2016. And then basically the truly amazing thing about this company is their team is about 200 people. And about 20% is all mathematicians. And then their main amazing thing is AI-powered credit scoring system. So basically, tech-wise, they're good. Management-wise, they're good. And then they just started to enter Philippines market. They just started the test market there.
So this makes complete sense in markets where you don't have those existing credit histories. You don't have the experience and these kind of companies out there. You can go in, like you say, 90% of people have bank accounts, but only 3% have credit cards, right? So you've got a big gap there, right? So it makes sense for these kind of companies to thrive there, right? Okay, so you have this success story. I'm sure you have a lot of Mongolians who want to be the next Ant Global, right? Exactly. They must be everywhere in the startup ecosystem of Mongolia. What happens now? You've got to put together this platform to help all those startup founders achieve their dreams. So let's have a look at the product itself and what you're building. Back into the platform if we can. And I'll jump forward to the business model itself. So help us understand what this is. I know you're saying you're building the infrastructure, but that could be anything, right? That could be an event. It could be a co-working space. How do you describe this? What is it that you're building in the sense that what's the physical manifestation of this?
Do you want to explain?
Sure. So I think some of the things we have already covered just now. So we have two parts to the business model. The first one is what we call the Irbis Explorer. So Irbis Explorer, like the name suggests, right, it's supposed to explore, supposed to go into the areas that you don't know about in terms of investors, and then we find the gems for you. So that's an explorer. And the way we can do it is because, like the Global success story, we kind of found the secret sauce. We know exactly how to enter the market in Mongolia, how to position ourselves, how to target the consumers even. So that's where we translate all the learning points over the past 3 years from our founders from Global into determining what could potentially be the secret sauce for the next startup. So that's the Explorer. And for Explorer, we usually work with asset managers, with fund managers, or even venture capitals, where we are part of the decision making. So they use us, they use our know-how. Basically, it's a digital tool. So they use our know-how and then they make decision. So that's Explorer. But then on the other hand, you can find a good gem in a cave, right? But then you realize that it's an unpolished gem. So an unpolished gem, like a diamond, you can't sell for much, right? So the other side of the story is the Irbis Oasis, where after we found a gem, we actually start to polish them. So Irbis Oasis is, for lack of a better word, a digital accelerator. So some call it a venture builder, some call it a venture studio. And the whole purpose and idea of it is to not just put money. Capital is today kind of cheap. So it's not just capital, but we really go hands down. We talk to the founders face to face, through webinars sometimes, where our mentors are sitting globally. We find out what is wrong with them, and then we help fix them. So maybe I can use a story which is a little bit better to explain, right? One of our early incubator company is a co-working space. So it's the biggest co-working space in Mongolia. They have presence in Singapore, they have presence in recently Malaysia, and going to have in Thailand. What happened is that these executives are really good at running the co-working space. They are good at operations, good at finding startups, good at creating a whole community. But what they were lacking is more on the legal and the finance side. So for this company, we went in, we actually helped them to clean up their corporate structure, how to make sure the shareholdings, the corporate governance is correct. And then we do valuation studies. So based in Singapore, I have friends in different co-working space, the large one. We start to understand the matrix that they look at the co-working spaces, right? So we start with the valuation. We start to kind of clean up their finances and make sure that they are now positioned as a good acquisition target, for example, right? So these are the kind of things that we help in the Irbis Oasis.
How is that different from a traditional accelerator in the sense that I know on one of your slides you talk about Techstars and you have a comparison. I mean, this is one of the premium accelerators in the world, obviously well-known brand. They have a great network. What do you do differently and what are you trying to do differently?
So on that, right, of course, we cannot compete with Techstars, Y Combinator, legal 500 startups. All this, we cannot compete. And then all these accelerators or VCs, they target developing markets. And then they have different business model than what we are doing. And then one thing we believe at Irbis Ventures is one size does not fit all. So all these startups, and then because our mainly target startups are early stage, the issues are different because of their founders. So founders could be lawyers, founders could be engineers, founders could be financial guys. And then depending on their background, they lack on different things. And then because they lack on different things, sometimes their end product is somewhat different what they expected, or they have just issues they don't have time to fix. So most of these startups, they start, concentrating on the product or their services. And then they don't have time or manpower to do their legal or financials correctly. But one issue that will come up in the future is once institutional investors comes in. So imagine Techstars, the institutional, they have that financial risk, reputational risk they think about to invest in a startup. And then, of course, they do very good due diligence. And then basically they dig out the company, right? And then once they actually see a lot of issues, sometimes they just go away because it's just too much risk and too much time to fix this company. But if the actual startup product or technology is amazing enough, they come in and they actually help fixing it. So what we actually comment out is, if you have a startup and then if you believe you go into region and if you go global, you should start fixing company from the start. Because fixing your issues in the future or fixing it from the start, actually fixing it in the future is much more costly for you, and then it would be no easy job. It's super painful. That I can say because I was a lawyer. I did a lot of due diligence on companies. Even big corporations, they have issues that they have a hard time fixing it, because once it's there, it's very difficult to fix it.
So just getting an understanding of how you operate, and particularly in these markets as well, it sounds like a lot of your value add is fixing companies, early startups, especially in these emerging markets, which are probably quite raw, quite rough, because they, like you say, when you talked about the Mongolian startup scene, it's 3 years old, right? That's probably the oldest startup there is 3 years. And you don't have that sort of handing down of knowledge so much, right? So a lot of the people there probably are very raw, very rough in their business models. Maybe they don't understand things like minimum viable product, and these are all new ideas, right? So you're adding a lot of value just by getting people in shape, right? Whereas maybe some of the more institutional money may be focused more on the less risky stuff, the stuff that looks like what they're expecting. You're going in there and saying, okay, I see a lot of opportunity here, but it's a lot of work. We need to go in and we need to help fix what's broken. That must require a lot of patience in working with these startups, right?
Yeah, so at this stage, we haven't actually seen inside of so many startups in Mongolia. There could be good startups who has very good financials and everything. And then recent 2 years, a lot of new startups raising funds from angel investors in Mongolia, Hong Kong, Singapore, Japan. Basically, they're raising funds. They can do it now because they can pitch. They can actually talk about their vision, and their technology is amazing. And then all these startups are doing well. But the issue is whether their financial terms with the investors are good.
Yeah.
Because you can agree with investor on day one, whatever you think that is good for you. But the issue is if things go bad or if things go too good, then the problem starts, right? The investor actually has too much rights, or they have basically just financial help and then no other help. So that signing even agreement with investors very crucial, because everyone now believes that even you get X amount from investor, that's good. But finding good investor, good investor is very important.
Yeah, that's it. Good investors and bad investors, unsophisticated investors as well, especially in emerging markets, because both sides need to be educating. How do you help with that? For example, if I was a startup and I was talking to an investor, do you help me in a sense? Do you help me understand what a term sheet is, how it should look, what I should be looking for in an investor? I should be doing due diligence on an investor, but what do I look for?
So
right?
That's a very interesting question, right? So basically, it's basically a legal question. What happens is most of the time there are two people, right? Startup founder and then an angel investor. And then both of them want certain things to be in their way. But the thing is, because who has a lawyer, they prepare the term sheet.
Yeah.
And then sometimes it is just one-sided. And then one-sided agreements usually has very bad effects. Even for investor, he believes, I signed this amazing agreement with this startup, and then in the future, I'll be golden. But the thing is, that document will be reviewed by the next investor.
Yeah.
And then when they see that document, they never invest because the first guy has too much rights. I won't go in. So that startup is gone, right? Because basically they would be having fundraising
and he
issues.
won't exit as well.
Yeah.
So
And then startup side, sometimes they want very good agreement with investor and everything. So the key is balanced. So balanced agreement where transparency is there and then good relationship is there. That's all about startup term sheet.
absolutely.
So we actually help preparing and negotiating those term sheet.
yeah.
And then actually that is the good starting point for startups as well to understand how this capital structure works with and then investor relations work.
Yeah, because nobody's teaching that stuff, right? And you need years of experience in the startup ecosystem to understand it, and a lot of mistakes, right?
So that's the modeling through, right? So basically you just learn in a hard way.
Yeah.
And then we at Irbis Ventures, we don't believe learning hard way is the best way. Of course, it's you learn it better than you somebody tells you. But the thing is, everyone at this stage, they don't have much time to actually make wrong thing and then learn.
Yeah, well, people have made the mistakes, and therefore you don't have to repeat them, right? You can share the lessons learned for other people.
Exactly.
Right? Okay, let's have a look at the journey of where you have come from a little bit with Irbis, and also where you go from here. So I'll flip forward on the pitch deck if I can to, and we'll come to the team in a minute. Where you are in terms of your fundraising as well, and also your stages. So help me understand, before we jump back into the fundraising, where you've come from until now. So you closed the seed round in January 2019, this year. And since then, you have put all this together. You started the process. Are you live at the moment? Do you have people able to apply and join? Is that open at the moment? Where are you with your product side?
So thanks to our seed investors, everyone in Mongolia, thanks so much for trusting us. And then actually with $1 million raised by January 2019, we actually did a couple of things. So we basically conceptualized this project, and then we built the core team. And now we have about 25 full-time people, 17 in Mongolia and then 8 in Singapore. And then we have mentor network of about 20 mentors based in Hong Kong, Singapore, Thailand, Malaysia, as well as Switzerland. And then basically we reached the point where we actually start helping startups. So Zheng Wei mentioned we until today we help 2 startups. And then now we actually doing competition among startups.
Mm-hmm.
And then where we're going to find 5 amazing startups and then actually work with them hands-on approach. Basically help them to be be successful in their next stage.
Okay, so that's happening now. Was that next, the competition? Where are you with that?
This competition. So do you want to talk about?
The application is happening now. So
Okay, so it's open, yeah?
we've been inviting startups to participate in a competition starting in July 1st.
Yeah.
So the application is gonna end on 1st of August. So now we're just accepting startups, and then we will review the startups from 1st of August to the mid of August. So that's going to be reviewed by all the partners that we have and all the mentors that we have, and then we will invite the startup to join us, right, for the next month on Pitchdeck building.
Yeah.
So we teach them how to position yourself. These are things that you have to clean up, blah 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 blah. And then the most exciting part, in the middle of September, we will invite these 5 startups to Gobi Desert.
Yeah.
So in the middle of the most exotic, the most remote desert in the world, in the middle of it, we will hold a pitch contest.
Will it be like in a yurt or something?
Yeah, exactly.
Will we? That is pretty radical.
So yeah, we invite basically high net worth individuals from Mongolia. So these are the guys who are very seasoned in terms of their business sense and everything else. And then we're gonna invite investors like venture capitals the big ones from Southeast Asia, from Asia, all the way to Gobi Desert. And these guys collectively will be the judge for the competition. So then they will then vote among the top 5 who's going to be the winner. And of course, there's a cash prize, right?
How is it going to be in the Gobi Desert running a pitch competition?
It's going to be amazing.
It's going to be crazy. Because one thing that we found out in the Gobi Desert,
Have you been?
I haven't.
Yeah.
But the thing is that there's no internet there.
Right. That's what I'm thinking.
And shame to say, actually, I'm Mongolian, but I've never been there as well.
Oh, you've never been there?
Yeah.
You know what you're getting into?
I don't know. But it's amazing.
So you're going to run a pitch competition. We don't need the internet to do a pitch competition, do you? You just need electricity, a generator, and they'll be pretty raw.
That's right.
Are you doing that to... I mean, I know it's interesting, it's exciting, and it's going to be radical, and it's something to talk about.
Yeah.
Do you think you're going to attract a certain type of startup because of that? Because I imagine some people might get scared off by that, but that might actually be a good thing, right?
So one interesting thing is it's basically we bring in 30 VCs, corporations, and then as well as angel investors, high net worth individuals, right? And then we actually give them 2 days in Gobi, where they can actually also experience quite exotic experience, like in Gobi. And then basically for startups, just to be in front of these 30 investors is golden opportunity. Because startups, we all busy, and then we all think about, what we do with our next strategy and everything. So startups are busy, and then also these investors are busy. So we just give them opportunity to relax 2 days. And then at the end of these 2 days, actually they do pitch contest, and then everybody's happy.
Yeah.
And then they connect, and then basically we'll be locking 30 people in
it's like
Mongolia.
An island, isn't it? It's an
exactly.
island. We can't
2
escape
days,
from
and
it.
then these startups would have life of basically it's rare opportunity for them to connect with these people.
Yeah, interesting. It's going to make a very interesting documentary as well, I think, in terms of capturing that journey and seeing who sort of really does well in that environment. How do you get paid out of that? Are you taking a carry on the deals? Are you charging the investors? Are you charging the startups?
So for top 5 startups, we're going to invest $20,000, and then we won't get basically nominal value out of it. We basically negotiate with the startup, and then depending on their current valuation, we get X percentage. And then actually, if the startup is amazing enough, we follow on with our further funding. And then from those investment network, there could be also further investments. And then basically, at the finals of this competition, all these 5 startups are competing for $20,000 cash prize, where we won't get anything. So it is a pure reward.
So you're operating as a fund in this sense, that you're looking for deals. You said you're going to invest money.
Yeah, so that would be proprietary investment. Yeah. So we don't have actually investment arm, which is actually structured as a fund.
Yeah.
We actually investing from our cash balance.
So how are you making money on that?
Certain percentage we would get, and then we actually help these startups, for example, get the further fundraising, and then also go to the next region or next market, and then their valuation goes up, and then our share in that startup, the price would increase, and then hopefully within next 5, 6 or even 10 years. If there's exit, we make money out of it. So
you're not charging fees in that?
No.
Okay, and not charging equity in lieu of fees, are you? Because I know that's an accelerator will charge.
It depends on the startup, actually.
Yeah.
If it's early stage startup where we actually help them to structure their company and everything, we don't charge for that if we actually invested in a startup. But there could be companies that are willing to get our services, and for those companies we can actually talk about mode of payment, right? Whether they want to pay through shares, whether they want to get cash payment, it actually totally up to the startups.
Okay. what kind of partners are you looking for in building this? Because I think this is really important. You are across many emerging markets. You know, you can't do all of this alone. Who do you want to come in to help you build this thing? Are you looking for other accelerators? Are you looking for other funds? Are you looking for ecosystem builders? At this stage, what are the conversations you want to have?
So we are very open to work with anyone, mainly accelerators, VCs, where they want to have like diversified portfolio in their actual own portfolio, right? So basically, for these clients, we can say we actually find them good startups, and then we actually make due diligence on these startups, and then we actually polish them, help them to fix their company, and then when they come in, they would be ready for your accelerator. Because the issue is, if even the startup is good, and then like they speak English like fluently, the issue with the current model is they just assume all startups joining like new batch of this accelerator or VC round, they believe everyone is in the same ground. But it is not the case in real life, right? So some are like a little bit behind the batch and everything. And then because of that, some startups don't get everything out of this accelerator program. And then basically they might be saying, oh, this is like bad accelerator program and everything. So it's just like, not because this startup is bad, but it's just because they're not ready yet.
Yeah, they're not ready. Exactly. There's a bit of a mismatch, isn't it? They're not primed to optimize that accelerator program. So what you're talking about is accelerators in Asia who want access to these outsized returns in emerging markets, but maybe it's beyond their risk profile, or maybe they just want the diamonds refined, a little bit polished before they come to their accelerators. Would that be people who you would take a startup from a Bangladesh or Pakistan, for example, into Singapore or Hong Kong and work with an accelerator there? That would be an ideal situation for you.
Exactly. So we talked with a couple in Singapore and then also Hong Kong, because we haven't signed like anything in written. I don't think we can reveal the name, but they are like very excellent accelerators and VCs there. So for startups, it would be first a small step of the big step, right? If like everyone in like the startup world want to be like in Y Combinator or Techstars portfolio company, right? And that actually helps them to further fundraising, and then they have access to all these great mentors and everything. So we just help you to reach there.
Yeah, fantastic. Well, all the best. I hope it goes well. And what is the best way for people to contact you? Are you good with LinkedIn for people to reach out to you and contact you there?
LinkedIn, Facebook, even Instagram. And then we also have our Hotmail, so you can send us an email as well.
Yeah, okay. Tsengel and Zheng Wei, thank you so much for sharing your project with us. And I suppose if anybody is interested from the accelerator side all the way to the startups as well, if they fancy a trip to the Gobi Desert.
Right.
Yeah. By the time this goes out, it's still an opportunity, but I'm sure this is going to be an ongoing thing as well. If you missed the cut, then check it out anyway, because there'll be another one, I'm sure.
That's right.
And there'll be other opportunities to get on board. Sounds exciting. Come back on as well and share an update with us. Yeah, and I think it would be really good, especially here in Singapore. There's a lot of people interested in these markets, don't have the information. This is where we started, right? Don't have the information, maybe the education and the time to access these markets. So it would be good to learn a little bit more about the markets you're in, the kind of startups you work with as you develop more case studies. Right. So please come back and share those, and bring some of your startups here as well. It'd be fantastic to. We want to know what's going on in those markets as well. So Irbis Ventures, Tsengel and Zheng Wei, thank you so much today.
Thanks so much.
Hi, Graham Brown from Pitchdeckasia. Pitchdeckasia, powered by Pitch Media Asia. Pitchdeckasia is all about giving startup founders a voice. We are a show to help startup founders share their journey. So if you enjoy these stories, then why not subscribe to our YouTube channel? There's the subscribe button over there. Hit that subscribe button. Follow us on the journey. Leave a comment. I look forward to seeing you.